Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market continued its upward drive in the last week as investors remained jubilant over the prospects of a new round of Fed ease. Hopes were dashed a little bit last Friday as strong payroll numbers came out, and that carried over early in the week as Asian markets fell, and we got some modest selling here in the U.S. But then Powell refilled the punch bowl in his testimony to Congress during the week, and he voiced concerns over world economies and trade tensions and hinted at rate cuts. And of course, bad news is good news in this world that we live in right now. And usually one rate cut begets another one as the world actions simply are reflective of very, very sick conditions in a world that never really recovered from the mess that was created by the government here in the U.S. And by the central banks around the world. This will be historical were this to happen, that we get a rate cuts from the lowest rates that an interest rate cutting program ever began. This new round of rate cuts looks like it's going to start at the end of July. You think it would be a one and done? Or do you think that is the beginning? Usually you get one, you get more. That remains to be seen. This week I did a new video on Thursday, and the video, the intent of that was to look at our 300 stocks, 300 plus stocks that we do analysis on, and then bring to our subscribers what we thought were the best stocks for the potential for some upward moves. In other words, the fund managers usually are looking for things that have been missed in the markets that look good, that there's a reason to go up, and they start looking for those bargains. And I was really surprised. I mean, the result was that there were very few names left that I thought that could be bought. There were a huge amount that were in horrible condition. And there were 7 that we gave our subscribers that we thought had a good opportunity to move to the upside. But there was a ton of them that had moved up into resistance or sell zones. And that's reflective of a stock market that's moving up with poor breadth. In other words, fewer stocks that are driving the markets up. And that, of course, is the makings of a market that maybe is going to have a hard time pretty soon making a lot of upside ground. I want to mention something to you, and this is maybe what you would consider an antiquated way to look at the markets. But Dow theory in the past has had great credibility, and I want to show you 2 charts that I think are valid for you to look at, because when I do my analysis of 300 plus stocks and find very few stocks that are buyable and a lot of stocks that look horrible, well, that's poor breadth. And Dow theory is really about breadth. It's really about whether or not the whole economy is clicking at the same time, or there's just parts of the economy driving it up. So the Dow Jones Industrial Average, this is a weekly chart, and you can see in this weekly chart, it has our cycle analysis in there, and I'll just help you with that a little bit. These are cycle brackets down over here, and they show you the dominant cycle pattern that goes from low to low, and also the minor one that's in there, and you can see it's kind of a half cycle that trades in there, and you can see how that tracks out on the Dow right over here. And now we're in this area where 2 cycles were rising. You can see each of these areas where 2 cycles were rising, and that gives you good lifts in the market. Of course, this one drove us to a new high, 27,256, was the high on an intraday basis right over there, surpassing the bull market's peaks that we had right over here and right over here. This one being in 2018, this one being back here in 2018. So those were the old peaks right there. And in the middle, you had this big correction, that big drop of some 20%. That's really the key, that big correction, because you moved up to a new high. Now you can see we're anticipating further upside move to about 27.75 right over here between now and the end of September or into the fourth quarter of the year. So that's kind of the bullish scenario that we're looking at on the Dow. But when I switch this over, now make a mental picture of this, to the DJT, which is the transportation index, this one you can see, wow, I mean, look at how far this is from that high. So again, this is where the Dow fell that 20% down the downside. Transportation did a lot worse than that on the downside. And then it traced out this more bullish pattern, hit our buy zone, and moved up. But note how far it is from that high over there. So you have a Dow theory non-confirmation. In fact, this is some 11% from the high over here. What that is reflective of is a condition that all sectors of the economy are not moving in sync. That there's a look here at the transportation sector, which of course drives a lot of the economy, the railroads, the airlines, the shippers, and some of the shippers, Federal Express, UPS, those stocks look absolutely sick. And the airlines really mixed, and the railroads starting to falter. So you have a situation where the part of the country that moves versus the part of the country that moves up in investment, they're really out of sync. And that really, you look at that, it might be a warning. If you have doubts, and maybe you do, don't speak them too loud, because we don't want Richard Russell to turn over in his grave. And he was the longtime holder, and I really never missed any of his writings over decades. So I still think it has validity. It makes sense. And when I look at my own group of stocks, then I get it. I mean, I really see that this is a condition that sets up a market top down the road. Yeah, you know, we're not really looking for markets topping right now, but that could be a problem coming up pretty soon. It may take a long time for the Dow theory to prove out, and it often does, where one of the indexes or the other makes a new high for a while, and the other one just does not catch up, and then all of a sudden they move down together. With SPX right now still, you know, making all-time highs, and our target's still the 30-32 level, minimum target on the upside in here. So the likelihood is that the market continues to rally, as I just showed you on the Dow, into potentially the fourth quarter. So the strength that we have now is likely to continue. But if you're wondering what could possibly stop this market, just take a look at what happened in the bond auction yesterday. It was a disaster, a buyer's revolt. And it might be something important to think about. Just think about, what if interest rates go up? That's a big question to ask. That could actually be a shocker, and that might be that, you know, the Fed doesn't cut in July, or maybe they cut in July just in what they consider to be a balancing type thing, and then that's the end of it. Well, that would probably bring the great bear market of 2020 to 2022. Is that the first time I've said it here? Well, that's what I think. For the stock market this week, they were mixed. NASDAQ up over 1%, S&P 500 up fractionally, the Dow up maybe just over 1% also, but the Russell was still remaining weak, and that's reflective of the lower tier of the market not getting a bid in here. It's just like the heavyweights that are driving the market up. Yeah, the index stocks that are moving the market up as money flows in giant ways into indexes and really not into the individual stocks. overall. And that's, if you look at the breadth of the market, looking over not just S&P 500, but 6 or 8,000 stocks, it's just not that many stocks that are driving the market up. Bond market 30-year down 3/4 of a point, and that big decline came on the auction on Thursday, and that pushed yields up. 10-year yields up about 0.7 of a basis point. The 3-month to 10-year yield curve steepening pretty significantly over these last couple weeks, now only down to about 4 basis points. So before you know it, we might just have a flat yield curve here. Gold was choppy on the week, ends up gaining $11. I think there's something coming in here. And I'll speak about more of that to our subscribers this coming week, and I'll show you a little bit of that as we get into the short-term view coming up at the end of the show. Dollar moves down about 0.2%. Again, that was on Powell, and Powell also helped the oil market on this potential easing as oil jumps $2.50 and hits our upside target for the week. So that was pretty sweet. Don't forget, follow us on Twitter at askSlim, and become a YouTube subscriber. You like this video, make sure you give us a thumbs up. You don't like this video? Tell me why. Be right back. All right, every week we look at the best and worst stocks for the week. I just gave you an example of our cycle analysis. This is a type of analysis that, well, very few people in the world do. I'm an expert at it. I have a cycle analysis workshop on our website. It's expensive, and it's worth it because you're going to get 20 video modules. It'll take you hours and hours and hours to do. You're going to watch it like our other subscribers do 3-4 times, and you're going to come away understanding charts in a way that you never have before. Please go to our website and look at the cycle analysis workshop. And if you want to become a member, level 4, you use Thinkorswim. Our preferred broker is TDA, and you can then have our charts on your Thinkorswim platform, and that's a level 4. We can give you a month to try of that. It gives you everything else that we have also, 400 videos, all of our reports, and $73.50. You can have that half-price link. Just email me at slim@askSlim.com. Ask me for the half-price level 4 link. All right, so now let's get into the best and worst stocks for the week. The best stock for the week we're going to show you is Western Digital, WDC. And this stock is one that had a very, very big gain. And again, cycle analysis is what we're looking at. And here is the weekly chart on WDC. So what do we have here? Well, note the cycle brackets on the bottom, low to low to low, and then the rally. So this stock achieved what we consider to be a big improvement when you look at this. Up 28% in June, and then continuing to move up some 15% today, this week, and it was helped by Micron especially, really improving on better prospects over flash memory, which was the supply was just huge, and now it seems to be tightening. And when that happens, that's a commodity, and you get these upside moves. Micron, I'll show you in a second, also doing very well. Now, look at this peak right over here. This is what we call a base cycle. And when you get a base cycle done and you get a rally that gets you back to that level, that's bullish. It really says that the worst of this is over with, and you could expect more on the upside. Our minimum objective would be to this other cycle peak right there at near $61. So we're expecting even higher prices in here in Western Digital. You can see our projections in here of higher prices and then a correction into October, and it could even be better than this. So that's a good looking pattern that we're looking at there in Western Digital, up 14-15% on the week right now. Micron, which maybe led these moves in here in these stocks, let's just get a little closer in here for you to see. This has been a cheap stock, a PE around 6, and again, this is almost the identical pattern that we saw in Western Digital, and then moving up again. And you can see how repaired this is. This is your base cycle formed in here, getting up to that cycle peak resistance. Now, this area could be a tough spot for this stock. It's got a big resistance here at 46.5. So we think it's going to stall in here, maybe getting up to 46.5. We'll have to see if it can follow Western Digital and be vastly improved. Over 46.5, and it's going to be a better story in here. So we're looking for the potential for it to stall, as this is a tough spot. But they borrowed some money on some senior notes to pay off Intel on a flash memory deal, and they'll also put extra money into their general funds. So they raised some money. They have a debt that they had to pay off. I had done that, and that makes them in better shape. And with the flash memory sentiment better, that's good for them. Square, here's another one in here. Now, Square we have not loved. The reason is valuation, and it really has struggled in here when you look at this. And, you know, now I have to ask the question, which scenario here is right? Let me get a little closer look in here for you to see. Again, this is a nice basing cycle. You can see how this happens, and when you get that, it hits the support and then moves up and gets up to that level. That's really good. And you can see it's at intermediate resistance right now. So what we're looking at, note the minor cycle in here, and you can see that this one rallied into resistance, fell off, and then rallied again and couldn't even get anything going and fell off again. So we don't know whether it's going to do that in here, or a more bullish scenario takes it up here to this level of about close to 90. So the valuations in here are nutty. I mean, it's based on this year's PE, it's trading at something like a 120 based on the earnings projections, which have been raised. Based on next year, it's maybe more like about 70, 75. This is crazy valuations in here. It's getting pulled up by the PayPal action. Raymond James removes it from one of its really bearish stocks, and Citigroup said they came out and liked it. But this is really a very expensive stock. We think if it can pop through up to here, that it will begin to give ground quickly. So if you like this stock and you can get a move up to 90, I think you did well. We're gonna guess the more bullish scenario is the one that happens, only because the sentiment is so good and because we think the stock market's going to stay good. That, I think, though, would be a selling opportunity for investors based on the valuations that we see in here. Cigna gets this big upside move. What really helped is that President Trump came out and said he's dropping his plan to end the Medicare rebates. So they're going to continue to get the rebates, and this HMO group had a big jump. Citigroup up 8%, Humana, Anthem up 8%, UNH up about 7%. But look in here. I mean, you can see this really bearish cycle pattern here. It made the low here, made the low here, made the low here, all perfect rhythms. You can see that. Cycle analysis, the heartbeat of the market. We're looking for a continued pullback for a couple weeks, and then another try up into this fib confluence area, but we think it's going to be in bad shape. I really think that this political season that's coming up is going to be really bad for the HMOs, the drugs, everything in healthcare, and that this rally is a fake, and we're going to see these stocks moving down again. I'll show you some of the drugs or talk about them in the worst of the week, and that's all part of this discussion also. So moving up in here into this resistance zone, and a beautiful place to sell, in my opinion. So up 8% and a sell, I think, if it gets back up in there. NVIDIA, NVDA, is the last one I'm going to show you of my top 5 for the week. This stock gained 7%. Piper Jaffray says that gamers are liking the features in their new graphics card, but AMD has got competitive graphic card and is big competition for them. Now, this stock gave a basing cycle. Again, you can see the giant drop. It got up close to 300 based on the craze in cryptocurrencies, and then fell all the way down here to 124. I mean, that was a giant crash. And then it gave you this basing cycle right there, and now it's gotten up into this upper resistance zone and started to back off. We think that the resistance in here is going to bring a failure. That's 169 to about 178. That's where we think it's going to stall. And here, yeah, it's got a little more upside, but we think it's a high probability it's going to fail. Big major resistance zones right in here coming across. So I don't think that there's a lot of upside left in here, maybe a little bit, but then the stock likely to be moving to the downside again. 7% gain on the week. Maybe it's got a little bit more, but overall, I'm not loving that stock. That is the best 5 for the week with some, I think, good information in there and good opportunities. And here comes the worst. All right, for the worst 5 stocks of the week, we're going to start out just talking about GameStop. This is probably a stock I'm not going to show you much anymore. It was the biggest decliner of the 300 plus stocks that we follow this week, down over 11% again. When the stock was trading up around 12, 13, we projected a June low of 8. It actually plunged into June to a low of $4.71. It's now $4.89, and we think the stock is going to $2 or $3. This low PEs it's been in has been a value trap, and the earnings in here keep getting lowered, and their business model is just not successful any longer. So we think the stock is going a lot lower still, and one of those stocks that is going to be very threatened with existence as you move forward in here. So they're going to have to save themselves through some other business model. That could happen, and that would make the stock a great buy if that happened. But so far, investors are not seeing that, and the stock is down 11%. I'm not going to show you that one probably much anymore. First stock I am going to show you, though, in this worst of the week is Mosaic. Mosaic is down for the week. This is a stock in the fertilizer business, about 7%. And you can see the really negative pattern. So I want to show you in here what we look at. And you can see that this major low right over here. And you can see the dominant cycle. Now there are 3 pretty clear minor thirds in here. Cycle analysis is a lot like music. So here's your minor thirds right in here, a small cycle, a small cycle, a small cycle. And you can see how that forms in here. And the same thing right in here. This small cycle, not quite as clear. This one really clear here. And then 1, 2, 3 minor thirds here. And then moving down in the first minor third here. So when it moves down this sharply in the first minor third, that's a really bad sign. It's really negative when you look at this. You can see in here the 34-week moving average, which was support all the way up, now coming down and not even giving a chance yet to offer resistance. And you have in here what we the Hull moving average right over here is our momentum indicator. And you're in a period of improved momentum, which happens at the bottoms of cycles. So this is going to have to turn up again, or momentum is going to turn down. And once momentum turns down in a cycle, the stock really is in a lot of trouble at that point. And so if you look right over here where there was a mid-cycle where it turned up and then turned down again, it collapsed. So we're going to see if momentum holds up, but Mosaic really looks sick to us. Morgan Stanley downgrades the stock. Our target would be 19, right down at this old low over here. And I would not want to invest in this stock. Mosaic in the fertilizer business, and maybe it's just that the plantings were so bad and they're not going to replant right now. That might have an effect on it. Maybe it's something to do with trade. But anyway you look at it, the stock has been in a lot of trouble. Now we talked about the drugs and the fact that President Trump plans to drop the rebates. There's a plan to end the rebates, sorry. But now the fear is that his next plan to bring down drug prices is going to really negatively affect the drug stocks. Let me just bring this in here so this makes some sense to you. And this needs to go to our weekly right over here. And now you can see our analysis right there. Okay, now we got all the drawings in the proper proper place. So you have this big break in here, and again, we're looking at the 34-week moving average right in here coming up, and that says to us that if you look at the timing in here, you can see where this peaked right over here about 2/3 of the way into this cycle. This one peaked about 2/3 of the way into the cycle, about halfway into the cycle, and each one of these drops into the cycle lows. You can see that this is calling for a continued decline into the second week of August. So another month of potential declines in here. This is a bad stock. And were it to get even close to this area here near 73, it would be a major top that's forming. So it moved up beautifully. You can see 1, 2, 3 positively configured cycles. And then this one, which was about neutral, made a new high, which is a low odds thing based on this shape, but now has turned over and moving down in a big way. We think this is going to end up to be a major top in there. Eli Lilly down 5%, Bristol Myers down 3.5%, Amgen down 5%. Amgen is the one stock in the group, in the biotech, that is at a support zone, and that one I would look at for a pretty good potential rebound on here. These other ones I don't really like. In the solar category, CSIQ, this stock rolls over from resistance. It hit the resistance, no news, and starts to move down. I'm long First Solar, which is not really working that well right now as the stock backs off at this level. I love First Solar. I think the pattern's great. It's going to be moving up again. I'd probably like that better than CSIQ, which is not acting very well in this resistance area right there. So these stocks are relatively cheap. The prospects for solar moving forward are fantastic. That's one of the reasons I really like these stocks. And so this one, I don't think it's going to go down much. It's going to get some good support around $20, but I don't know that there's a lot of upside in it right now. I do like First Solar better than I do in here. 7% down for the week on no news. The next stock we'll look at is TripAdvisor. As this stock, and I want to mention again this great video that I did where I looked at so many stocks on Thursday and found 7 good ones and gave 20-something stocks that I think are ready to move down from sell zones, and this one was one of them. This one, TripAdvisor, in a really bad pattern. It's got a potential month ahead of it of hell, if you ask me, when you look at this. So we're going to look for downside. Now, the earnings in TripAdvisor on August 11th, and you could see how that lines up with the bottom of this cycle. Maybe the stock holds up until then and then collapses, or maybe it collapses into that period right there, as our projections are pointing, and then makes the low after the earnings come out. But either way, we think it's going to be moving down into and around earnings for TripAdvisor. Down 4% on the week on no news. And one more stock that I want to mention that we did in the same video, which we thought was a horrible stock, is BlackBerry. Well, this stock tried to be a reborn stock, but it's not. And so the stock, of course, they changed their business model significantly from handsets to internet security and other software things, and the stock breaks down. So it gave you this beautiful pattern that looked good. It looked like we'd get another rally up to here. I like it. I was bullish on it. But once it breaks this level, it's over with. And this projects to a decline into October. So no news on this one. This is another one that shows up in our list on the video that is horrible, and I really think is a sell. So down about 3.7% on the week on no news, and a very, very ugly stock. Were I to belong BlackBerry, I would not like that at all. That's it for the best and worst stocks for the week, and I'll be right back with you know what. All right, I'm going to give you the best, and I'm going to give you the best calls that I could give you on the short-term view for the week coming up. Before I do that, I want to tell you about that we have now launched. We're out of beta on our stock index report snapshot. This is for short-term traders, people that are day traders, intraday traders, scalpers. This is an amazing report that we put out every single day before the market opens. What we want to do is we want to improve your ability to see where the indexes could have impulses. In other words, where are the spots that are important that either they're going to stop, that they're meeting support and resistance, or that they're going to move through in an important way. That's the core of what this work is, to improve your winning trades and to help you avoid what would be the potential big losing trades, being on the wrong side of the market. We use momentum. We use several other studies in our proprietary method, and we bring it to you in a visual way that is phenomenal. We do this on the stock for the stock indexes in the S&P 500, the NASDAQ, and the Russell. We give you the important numbers. We give you the important condition of them, which gives you a great comparison of which of the indexes are more likely to move in which direction. So it's a lot about momentum and condition when we do that. Can't imagine that one can come into the market every morning without really having a good, intimate understanding of these indexes, and we help you with that. I'm just going to give you a little picture right now of the chart, one of the charts that we share, and this is just a 15-minute chart on the NASDAQ that we put up a couple days ago for you to get a sense for this. And what we give you, as you can see, is and this is an overlay of what happened in the NASDAQ on this day. And you can see the important resistance zone here, the important support zone right over here, and through those would have been acceleration areas, breakout acceleration zones. And you can see neither of them, it didn't get through either of them on that day, and it just really stayed on the range. Often what happens is when you get through these numbers, they spurt through in a big way, and you get to make the big trades. You instead of putting on a trade that you want to scalp out for 1 or 2 points, you might be able to hold them for 5 or 10 or more points based on the fact that you have some understanding of where the likelihood is that support or resistance will hit again. So were it to have been broken through or broken down, you would have had the key numbers in here. And we label them in different ways. This was a fib extension target zone, which if it got through here, it likely would have gotten up here. And this is just a key intraday support area, a big thick one that says, would it have broken down, it would likely have not broken below that level. So just a great picture there. There are great graphics that we send you with the stock index report. This is for level 2 members that get it on a daily basis. Our level 1 members get our weekly stock index report. To get this, you need to be a level 2 subscriber. You also would then get our 400 videos to really get an understanding of so many aspects of the markets and trading. There's 8 categories of videos in there, so you get all of that too, plus our weekly stock index report, ETF report, so much that you get just by becoming this level 2 member. For those of you that have not seen it or would like to see it, all you have to do is ask for a sample. We'll send you one of these reports to see. And if you want to try out this level 2 membership for a couple of weeks, we have a 14-day $14 special going on. All you have to do is write Matt, M-A-T-T, at askSlim.com. Ask him for the level 2 14-day special, and he'll send you that link to sign up for 14 days and also send you a sample report so you can see what you're actually going to be getting. So I really think that if you're a short-term trader, this is phenomenal. And even if you're not, you're a swing trader or something, this will give you good understandings of the market on a real short-term basis. So please do consider trying our special in here. And if you just want to jump in, you can sign up for monthly or even 3-month at a discount on there. So take a look at all of that. That is the stock index report daily snapshot. Just absolutely phenomenal. All right, so now we're going to get to the short-term view for the week. As always, I'm going to be accountable for what I said last week. Well, that's pretty easy because I got 4 of the 5 markets we look at just really spot on. The light crude, gold, dollar, bond market did pretty much what we expected to happen. The stock market was not that good. We get only partial credit for that in the stock market because we had anticipated that the market would be small down on the week, and it actually was up on the week, though mixed. The S&P 500 was up close to 1%. So We don't get a lot of credit for that one, though we did get some of the cycles shape correct in there. And that's what we look at. We want to check on how we did in support resistance areas, whether we think it's going to be up or down, and how we read the cycle patterns in there, the rhythms of the market. Those are all the things that we look at. So we're going to take a look here at light crude, gold, the dollar, the bond market, and the stock market, of course. So here is the short-term daily chart in light crude, and you can see that here. We had anticipated it was going to get up into that weekly resistance zone, getting up near $60. It actually just got slightly through that. And you can see the cycle patterns in there. These dotted lines are following the minor cycle rhythms in here. And so that you can see that we're looking for this to kind of flatten out and turn over in here, not make a lot of upside ground. We're going to call for a downside week. Note, momentum's still strong. The slim ribbon is on here. You can barely trade without the slim ribbon, in my opinion, because a sense of momentum and key levels is so important that you get with that. And then we expect that because the slim ribbon and momentum is positive, that we're going to get between now and into the following week a decline into this zone, dipping down to about 59. And this is a buy zone. You can see this cycle right over here hits the buy zone, moves up. We think it's going to do the same thing here and then move up again and get over 60 again. So that would be the buy zone. We're going to call it a down week in here as it tries to get up but can't get a lot more ground, and a shallow correction setting up there in the light crude market. The gold market /GC, I'm liking what I see in here. I'll speak more to this to our subscribers, I think, later on in the week. Coming up, this you can see the bull triangle forming in here. When you get cycles nesting in an area like this with only a minor decline and a bullish pattern forming, one of the videos that we do in the cycle analysis workshop is tell you and teach you how cycle patterns in multiple time frames make different chart patterns. In this case, you can see this declining phase was fighting this upward momentum phase right in here and didn't have a lot of downside. So when you started to move up in here and hit the buy zone, it says to us that this declining phase is over, this rally phase is beginning, and that's what makes the probability better than 2 to 1. It breaks out on the upside. That says to us that this area of about 1442 is likely to be surpassed, and that this breakout right over here is likely to happen. Here's your a fib extension right over there at about 1434. We think it's going to go through those numbers. We're going to look for an up week. Momentum in here still powerful. You can see that. Potentially large up week. We think it's a place for aggressive longs, and you can use this. See that little stop level right over there? If it gets under this level, something has changed. So we have 1383 as our stop level right over there, and that says to us, you can be long and use that as the level to say this is wrong. I think it's important to know that. Bull flag really good. We're going to call for a good size up week coming in here. The dollar, which tried to get a good rally, we thought that it would be really range bound in here in the dollar. We're going to look at $DXY, and we thought that the range was about 97.80, 96.80, and you can see the range in here, 97.60. 96.80 right there. So we pretty much nailed the range. We're going to lower our range a little bit right now and say it's like 97.60, 96.60. See this middle of the rising support right there? Well, it's not really rising anymore. It was, but it's not at the moment. And that's kind of the support, 96.60. We're down here, 96.45. Those are kind of the areas of support that we see. And you can see that we expect that it's not going to be able to make a lot of upside ground. This is an area over here that's key out in end of July, beginning of August, to see if it can get legs on the upside right there. In the meantime, we see this area right over here between now and the end of July as conducive to a sloppy area, which would be beneficial for the gold market. So that engulfing pattern really sets the top to the cycle peak right there. Notice the engulfing right over here and how that set that top right here. Notice the evening star right here and then the evening star here. Those set the top to that cycle. So we think the top is set in here. It's likely to be sloppy. And so we're going to call for the dollar to be a small weak. Momentum lost, momentum just neutral right in here and not able to get any footing at all. So we're going to look for sloppiness in there in that lowered range, and then likely setting up a better environment for the gold market. Bond market we were bearish in. We thought that the bond market would be lower. We thought it would test support around a 53.12 with a likelihood of it moving down to this area right over here, about 51.12 to 15. It got down to the level we expected and a little bit lower into these fib confluences of support. There's another week in here, and that says to me we're likely to be choppy lower for the week. We're going to look for a down week in here. Momentum, you can see now, this is really important that I'm going to show you right in here. Now, the momentum for this period right in here was positive. So you see the slim ribbon green arrow right there. That's where it told you you were likely to get advances that would be sustained. As the slim ribbon widens, it tells you that's really happening. And now, see this little blue arrow right there? For the first time in all of these weeks, since April, the upward momentum has been lost. So we're now in this corrective period. It's neutral momentum, no longer positive, and we would expect that we would get some choppiness in here on the way down in the market. Remember that we're looking at the Fed cutting rates, but the bond market, not sure about that, or that it might just be the end of it, and the buyers went away in the bond market for the auction. So that's really significant. What if rates finally do start to go up in a very significant way? Well, I don't think that's really going to happen right now, but I think it might happen come towards the end of the year when the bear market starts for the stock market. Yep, I'm starting to say it. The bond market we can see down for the week. Now, let's talk about the stock market. We thought the stock market would be a small down week in here, and we expected that it was going to dip down to a price around 95.52, 29.52. Let me look at my numbers in here. 29.52 was where we were looking for. Now, there's something that's for the people that have their cycle charts up and follow our analysis. I want you to see in here a little bit of a change that went on, and that is that the cycle widths in here on July 1st we narrowed them a little bit by 1 tick. In other words, the minor cycle was 10 and the dominant cycle was 20 days. And you can see how that was close to alignment, but now what we have done is removed one more bar out of them because we're getting a tightening up again. Now let me explain that to you. When you get into bull markets, often the anxiety around buying shortens the cycles. In other words, the dips are narrower, they're more shallow, and they don't last as long. And that's what happened in here. This one only 8 days. So what we're looking at is really 8 to 10 day patterns right in here, and that's making these 18 bar longer cycles. That means that we're now 3 days into this advance right over here, and so we're projecting a little more choppy upward move and then a correction into the following week. So we're going to look for a small down week. We think it's going to just chop around in here. Remember, our number up here is 30.32 or so. It doesn't have to make it in this cycle. It could make it out over here or higher, and that's kind of what we think, because this is really early to expect market's top. It's much more likely going to be out over here or way beyond that period, out into late summer or early fall. So we think it's going to continue chugging up. Look at where the upward momentum started right over here and the kind of market it gave you. Again, the slim ribbon, this really a strong upward move, and we're still in it. That's why we've been positive. And while I'm talking bear market now for 2020 to 2022, don't let that change what I'm looking at right now as a very positive condition for the stock market. We're looking for only minor shallow dips in here. There's a potential between now and later into the following week that we're going to get down to about 29.70. But man, this is a super buy area right over here, and it may even be higher based on how much higher we get in here, and likely to be moving up again. So those people that may be looking for a major top in here, it's way too early for that. We're really looking for a continued kind of choppy attempted rally in here. Yeah, choppier that we're getting right in here, and then some correction out into the following week. We're going to call this a small down week. In other words, try to get up, but then start to not really be able to hold. The middle of the slim ribbon, that 13-day exponential moving average, is likely to continue to be support for it, and then it probably tests it by a little bit when it gets down over here. This is a very bullish situation, and we're only looking for modest little shallow corrections in here and nothing more than that. We'll call a modest correction into the 3rd to 4th week of July. And in the meantime, trying to move up, and again, focusing on that 30-32 level right over there on that fib extension as a decent upside to look for right there. So that's our cycle analysis as we look at it in a much deeper way probably than you'll get in any other site. I hope that was fantastic information for you. Send me your information if you want that special level 4 that we're offering for $73.50. You'll get everything that we have. It's just phenomenal for a month. And if you want to try our daily snapshot level 2 with all the videos, 14 days, $14 special to give you a peek at all that. You can binge watch all the videos and watch all of you want. There's so much in there that you can learn about technical analysis or trader psychology or different stock sectors. It's crazy how much is in there and how much time we've spent to create all of those videos, all for you to learn, for me to pass forward the things that I've learned over 45 years as a trader in these markets. Hope you loved it. You can write me and let me know, or you can put a little note on the YouTube video, however you want to do that, and love to hear from you. That's it for the week. I want you to be so careful. It is so crazy out there. I'm always wishing you great trading.